Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, May 3rd, 2016. Quick overview on the Qs, where we're at, where we're likely headed. I started to do a video today during the markets, actually completed that video, and then something happened and it failed during the processing stage, which is right after it's complete and before I upload it to YouTube. This is a back test of the channel. This is where I was doing the video today, pointing out that this is an objective area or was an objective area to add today. We'll see what happens tomorrow. This is a downtrend channel I've started highlighting recently, and prices are acting well. Last night, when after the close, I pointed out we closed right on that channel. Forecast moved down. So far, so good. We are at pretty important support, or at least I should say we hit that important support on Friday, the 104.90 area, which I've had on my 60-minute charts. And I encourage you can go back in. I have a whole string of QQQ charts here. I'll put one of them up. They all the way going back to, for a while now. This is April 17th, and this is the one of the scenarios that I've drawn, or I've been actually, I should say, pretty consistent on the scenario breakdown. Initially, I didn't foresee the back test, but it did happen. Then I pointed it out, and we didn't take out that New Year's gap. We came close. The Qs tried to backfill it, but didn't even get all the way to the top of the gap, and have since rolled over. So you can see all the way on April 17th, I predicted, gap down, pop up off this support level right there, move down to that level, bounce back up to retest, and a move down to, at the time I had 104.75, and I shortly after revised that 104.91, I call it 104.90 area I kept talking about. And so let's look what happened. That's about exactly what happened. We had the gap down, pop up, just like I mentioned. Finally broke down, like I said there, caught support, bounced up. And again, you can go back to the more recent charts and you'll see these other levels that were added. And it's been playing out perfectly. And my point here is these are levels that you can trade off of, by adding. If you're a very active trader, you can game these support and resistance levels by, micromanaging your trade. Let's say you're short the Qs from the breakdown of the wedge. You shorted the back test, then you cover at the first support level where a reaction was expected. You trade a quick intraday, day trade, whatever, and you either reposition on the bounce. That's what I usually like to do. Sometimes I'll wait for a breakdown to confirm, but I prefer to reposition on the bounce. And that's why I tried to get that out today earlier, just to state that was we're at that downtrend line again, an objective area. The market mounted a little intraday bounce today and still closed lower, down almost 1%. But again, you look at the how well the Qs are playing out to that forecast. It's almost perfect so far. So that 104.90, that was revised because we had that 38.2 fib there. We have a bottom of a gap, which is very nice. Gaps are like magnets, and that was backfilled on Friday, and that's why we had that bounce and pulled back. And I think we go lower. Something worth mentioning as far as the reason why I don't think this correction's over yet. I've mentioned these trend indicators here. That's the MACD below zero. The zero line, that dotted line, does a great job of defining trends, just as it did. I like to use that white line, the 9 EMA. And as you can see throughout this whole period here, throughout the entire uptrend off the lows back here in February, that MACD signal line, the 9 EMA, was above the zero level, telling you the trend was bullish. Now it's bearish. So keep an eye on that. That would be the first, let's say, the first sign that the bearish case may no longer be intact if and when we get the crossover on the MACD there above that zero line. Of course, if we take out that near-term downtrend line, that's minor. I wouldn't, this channel, we could pop above that channel, but then you want to watch these support levels. I'm fine as long as we stay under 108.50. I'm okay with anything that happens as far as counter trend bounces. I don't want to see us go back in. We've already backfilled that gap or came close to it, and that was, as you guys recall, my threshold for a bounce in the Qs. So, I'll allow for a move up there. However, I'm not expecting it. I didn't cover anything today. In fact, I added short exposure today. And I do expect a break of this 104.90 level. So that isn't a primary scenario, but it's one possibility. So tomorrow I'd like to see, ideally, we gap down. I love gaps during these impulsive moves down because they trap the longs and they leave the wannabe shorts standing there without an objective entry, and it just makes for a better bearish case from my experience, and that's how the markets tend to work. And the same thing on an uptrend. When the market decides it's bullish and it wants to go up, it tends to gap up. Pullbacks to resistance often get bought up earlier before you actually get to that resistance, denying longs an entry and denying trap shorts an exit. It's the same thing in reverse in a downtrend. So ideally, tomorrow would be a gap down. That is your next support, 103.35 roughly. You have nice price resistance there, price quite a few reactions, as well as that 50% Fibonacci retracement off the February lows, that whole move up. And I'll take a look here at the daily charts and give you the bigger picture in a second. So again, near term, so far, I've caught it pretty darn well on the way down. But it can get, at this point, you get a little bit stretched in the short term, and they could try to run it up. I'm not, I've made the decision. I'm swing trading right now. I've made it clear that I expect a broad-based sell-off that can will likely last for at least a few weeks, 2-3 weeks, and possibly more. As such, I'm in swing trade mode. I'm not in day trade mode like I might normally be when the market's choppy, the direction's unclear, my confidence is very low, in which case I would have covered right here on the initial tag of 104.90. But I'm not right now. And again, this is what will change it. A move over 108.50, bullish crossover. I take everything into consideration, the SPY, what the small caps, what everything else is doing. So, but as of now, that's my scenario, or my forecast. Let's take a look at the daily chart. A little bit busy. I'll give you a clean version of this chart, but I pointed out divergence on the daily time frame on a very steep bearish rising wedge. We've come down, nice bearish action. Again, I've done a detailed video on the Qs and the SPY and everything else. I won't go into everything that's happened here that strengthens that bearish case or formulates my bearish outlook. But I do want to point out that this orange line which is where we're looking on that 60-minute chart at support, is a pretty significant level. I can go back here. I see nice reactions. I see Fibonacci, the same Fibonacci retracement level I just mentioned before, or at least this one drawn here off the highs into the recent lows. So we have some fibs for support, price support. If and when that goes, let me give you a clean board here. All right, forget about everything that happened on that other one. Here's the bigger picture. This is support right here. As I mentioned, let's turn this on 104.90 roughly. I don't have it zeroed out here. We'll call it 104.90. That's support. When that goes, the next major support for a swing trade I see is all the way down here about 99.85. So to try to quantify it for you, that's the top of the support zone. That's about another 5.75, and the bottom of that support zone's down here about 99. So, and that would be my next swing target, and that's about a 6.5% drop from current levels. And if that level doesn't hold, I would expect a reaction there. It's a pretty significant level. If that doesn't hold, this is critical support. That's why I have it colored red. This is the do or die. If and when this goes, then I think it's safe to say, well, I've been stating for a while, I think everything points to the fact we're in a new bear market, but this will be where we'll call it the moment of realization for the bulls, if and when that 94.43 happens. And if we start getting there, it'll get pretty ugly. You'll see sentiment start ramping up real bearish again. But let's try not to get ahead of ourselves. This is where we're at. We've already had a nice breakdown. If you measure this move down, you take the widest point of the wedge, that really meets the wedge projection. So I'd like to see what happens tomorrow before doing much more. But again, I don't want to be ambiguous. I do favor more downside, even if it takes a little while. And stated which levels will concern me if we take those out. And there's the bigger picture. I've gone over this many times. That the PPO is still in bearish territory. And we haven't seen that again. The last time the PPO, that white line, the signal line, and this is one of many trend indicators I use, the last time that was bearish was back in the bear market from 2007 to 2009. All throughout the bull market, that white line, the signal line, has remained above the zero line. And this just tells me early stage bear market action, and that's why I favor. Whereas in a bull market, if I was playing this, shorting this bearish rising wedge breakdown, you could bet your bottom dollar I'd be covering right there and I'd be out if I even held out that long. So it's the longer term, my longer term analysis that plays into the fact that I expect support levels which might normally produce a reaction to break. And if we're at where I think we are, then I think you'll see these levels smash through pretty impulsively, such as a quick move down. We've already visited that level once. That's something else I wanted to add. I did in the video earlier today, which was lost. You know, in the beginning, those support levels tend to hold for a while. Look how many 60-minute candlesticks held. But once the selling starts to roll and get underway, it's usually a initial tag. These are two candlesticks that tag that level here, but that's on the same trading day. It's a 60-minute chart. So we had, we hit that level one day, couple 60-minute sticks, bounced up, bounced down. We've already had a tag of 104.90. So that level has been fulfilled. What I mean by that fulfilled, I often say the initial tag of support when tested from above often produces a reaction. And at this point, I favor one. I think one reaction is enough, is what I'm trying to say. So I think the next time we visit that, any reaction will likely be fleeting, if any. We may just slice right through it, or we may gap down below it. And if I'm wrong, I already gave you some levels that will start to prove me wrong. Again, I won't even, it'll take everything into consideration. Look at a bullish crossover here, move up above that level. So that's where those are the things I'm watching on the Qs, and I think I can wrap this up here, and this will be one of the shorter videos that I've done in a while. So hope you enjoyed it. This has been Randy Finney with Right Side of the Chart.